There is a rumor spreading. It says the Internal Revenue Service is now watching every single dollar you send or receive, every Zelle payment to a friend for pizza, every bank transfer to a family member for a birthday gift, every Venmo transaction for splitting a bill. This idea has caused a lot of worry. People are concerned that their personal financial activities are under a microscope. They fear that a simple act of sharing money with a friend could lead to a tax bill or a complicated audit. The rumor suggests a new era of total financial surveillance. The fact is more nuanced and less alarming. The IRS does not have a system to watch every personal transaction you make. Your bank account is not an open book for agents to read at will. Recent tax law changes are not about tracking personal gifts or reimbursements. Instead, the focus is on business transactions. The IRS is trying to get a clearer picture of income from selling goods, income from providing services, income from online platforms and apps. This effort aims to close the tax gap, the difference between taxes owed and taxes actually paid. The core issue lies in a specific tax form. Form 1099-K, payment card, and third-party network transactions. The form is not new, but the rules about who receives it have been changing. The government wants to ensure people who run businesses, even small side hustles, are reporting income correctly. The changes do not mean the IRS is reading the memo line on your Zelle transfers. Certain payment platforms are now required to report the total amount of business-related payments they process for you, but only if those payments meet specific criteria and thresholds set by law. Understanding this distinction is the first step. It is not about government spying on you. It is about using data to verify income from commercial activities. So, what exactly is a Form 1099-K? Think of it as an information slip, a tax document the IRS uses to track money received through certain payment systems. It reports the gross amount of all reportable payment transactions for a calendar year, sent to you and the IRS by a third-party settlement organization, a TPSO. Example, a credit card processor, an online marketplace like Etsy or eBay, or a payment app like PayPal or Venmo. It states the total dollar amount processed for you, and helps the IRS cross-reference the income you report. The amount shown is the gross amount. Gross includes your earnings, sales tax, shipping fees, and processing fees charged by the platform. It does not account for business expenses, returns, or refunds. It is a raw total of money that moved through the account. Sender, the payment settlement entity. Recipient, you, the seller or service provider. You receive it by mail or download it in your account. Deadline, by January 31st. A copy also goes to the IRS, and sometimes to your state. Receiving a 1099-K does not automatically mean you owe taxes on the full amount. The form is a starting point. You calculate taxable income from your records. Subtract business expenses, cost of goods sold, fees, and any personal transactions mistakenly included. The 1099-K helps with compliance but does not tell the whole story. You provide the rest on your return. What it is: an information slip. Gross is not net. Match it to your own records. Now let us talk about the reporting thresholds for 2024 and 2025. Space for musical breath. For many years the rules had a high threshold, over 200 transactions and over $20,000. Most small side businesses, occasional sales or casual gigs flew under the reporting radar, though the income was still taxable. The American Rescue Plan Act lowered the reporting threshold to $600 with no minimum transactions. Implementation was delayed due to widespread confusion, so the IRS announced a phased-in approach. For the 2024 tax year, the reporting threshold was set at $5,000 as a transition. If you received over $5,000 in 2024 for goods services on a platform, expect a 1099-K in January 2025. The IRS has indicated it may lower the threshold further, possibly back to $600 for 2025 and beyond. Check irs.gov for updates. The threshold acts as a trigger for automatic matching. If a 1099-K exists, systems look for income on your return. If you do not report corresponding income, you may receive a CP 2000 notice proposing additional tax, interest, and penalties. Stay updated on the threshold each year at irs.gov. This shift brings more small business owners, freelancers, and gig workers into formal 1099-K reporting. It creates a more level playing field, but increases your responsibility to keep accurate records and separate business from personal. With lower thresholds, meticulous bookkeeping becomes essential for anyone earning money online. Musical breath. One of the biggest areas of confusion surrounds Zelle and direct bank transfers. Zelle facilitates payments directly between bank accounts. It does not hold accounts or settle funds. It is the messaging layer. Because of this, most personal Zelle transactions are not subject to 1099-K reporting. Roommate sends rent share, parents send a birthday gift. These are personal transfers, not payments for goods or services. The same applies to direct bank transfers, unless it is part of a business transaction. PayPal and Venmo can hold balances and process goods services. They are TPSOs and must follow IRS thresholds. If a payment is tagged for goods and services, fees may apply, and it counts toward 1099-K totals. What matters is the nature of the transaction, not the app you use. Use the correct settings to prevent personal reimbursements from being misclassified. A cousin reimburses $40 for yarn. Personal reimbursement, not taxable income. You should not receive a 1099-K for this. An Etsy sale for $150 is business revenue, included in your 1099-K if you exceed the threshold. Freelance logo work paid $700 on PayPal marked services. Business income, added to 1099-K totals. Selling a used couch at a loss is generally not taxable, but the platform cannot know that. Keep records to show it. Brief breath. The reporting threshold is the dollar amount that triggers a platform to issue a 1099-K and to send data to the IRS. Old, $20,000 and 200 transactions. 2024 transitional, $5,000 regardless of transaction count. One $5,000 payment for a service could trigger a form. When the IRS receives a 1099-K, it expects to see income. No match can trigger a CP2000 notice. IRS indicates plans to lower further, possibly to $600. That makes accurate records essential for many more people. Always verify the current threshold at irs.gov. Given these changes, take proactive steps. Maintain meticulous records. Do not rely on platforms. Use a spreadsheet, software, or a notebook. Record date, amount, source, and purpose for each payment. Separate finances with a dedicated business account for income and expenses. Review monthly, ensure personal transfers are tagged correctly. Refund, resend if needed to avoid threshold inflation. Download monthly statements and store them with your records. At year-end, reconcile your totals to 1099-K. Investigate mismatches, personal items included or refunds not reflected. It is possible your 1099-K has errors. Do not panic. And do not ignore it. Contact the issuer listed on the form, explain the discrepancy and request a corrected 1099-K. If not corrected in time, report your actual income using your records. On Schedule C, report the 1099-K total and subtract non-business with clear notes. Keep documentation. The changing landscape can feel overwhelming, but it does not have to be. The core message is not that the IRS is watching every personal transfer. It is that business income must be reported, regardless of platform. The new 1099-K rules are a mechanism to enforce that principle. Understand the rules. Take practical steps. Personal gifts and reimbursements are not the target. Start now, not next January. If you earn from a side gig or online sales, implement a simple record-keeping system. Open a separate bank account to create a clear boundary. This one step can save hours and worry. These habits are the foundation of sound financial management and put you in control. When you receive a 1099-K, view it as a checkpoint, not a bill. Review and compare to your records. If incorrect, address it with the issuer. Do not let an inaccurate form dictate your return. Your accurate, contemporaneous records are the most reliable truth. Keep returns, ledgers, receipts, and 1099-Ks for 3 to 7 years. Use irs.gov for FAQs and publications. For personal advice, consult a tax professional, a CPA, or enrolled agent. Stay calm, get organized, be informed, and you can handle 2025 with clarity and ease.